Today, we're talking about insurance. Definitely not the most sexiest topic, but probably the one thing you want to have when things go wrong, because when they go wrong, they go super wrong. So I've got Greg Jones with Crum-Halsted Agency and Jose Melendez with Melendez Insurance Group. Both of them are brokers, and both of your guys' business are a little bit different size. So I think we'll have some different aspects on, different insurance policies. I actually brought my own insurance policy to go over. So that way, if there's any kind of questions about specifics, we can jump into that. I'll let you kind of introduce yourself a little bit more, Greg, and then Jose, and then I got a couple softball questions so we can get the process going well.
Yeah. So my name is Greg Jones. I'm a risk architect with Crum-Halsted Insurance and Risk Management. I've been in the industry since the start of 2012. In that time, I've dealt with pretty much every type of insurance policy you can imagine. But over the years, my specialization has been real estate development and construction.
Jose Melendez, president of Melendez Insurance Group. Been in the insurance game over 20 years. I don't want to give an exact number or give away my age, right? No, but I did some insurance when I was a banker many years ago. Then I started my own shop in 2007. So been on my own since 2007 as a independent broker. And we help individuals and businesses with all things related to insurance. And you said something private. I have a twin brother, but I'm 2 minutes older. And I grew up in the city of Chicago, Sox fan.
Do you guys both have kids?
We do.
Yeah.
Nice. How old are they?
8, 6, and 2.
8, 6, and 2.
9 and 12, but the 9 is 9 going on, 15.
He's
runs
not
that
driving
house.
yet, though, is he?
She runs the house.
She's not driving.
She's driving everything around the house.
Other than the car.
No car.
Nice. So I want to start with a super easy question, maybe with Jose, but like when you think of insurance, like what is insurance and why do we need it? Is really my straightforward
So,
question.
yeah, and
to start.
this is something that I really try to tell everybody. It's like, in the event something happens, worst case scenario, because you don't like to think about worst case scenarios. We're instinctively want to only think about good situations. So it's to deliver on a promise to you that contract you have with the carrier, that we're able to protect your assets in the event of a loss, essentially.
Okay, cool. And the other thing, Greg, the difference between someone who actually holds the insurance, like a State Farm, and you guys as a broker, could you kind of describe how that works?
Yeah. So I think one of the advantages that you have when you're dealing with a broker is you have access to multiple options for your assets. So part of what we do, and I think you'd agree as brokers, is based on what kind of property you're looking at or project or, whatever the case might be, you're trying to look at what carrier out there is going to be the best fit for what that client's needs are. Whereas when you're dealing with what we call a captive carrier, so a State Farm and Allstate Farm or something like that, they have one product and there's not a lot of deviation from what they can offer. So that's a big advantage of working through a broker.
So how many?
Can I just add?
Yeah,
to
of
that?
course.
Recently, Hurricane Ian destroyed a lot in Florida. It was $100 billion event. And the reason that that's a big deal is because it affects the national carriers, like the captives, like State Farm and Allstate. They're having to eat billions and billions of dollars of losses. So they got to make up for it somehow, right?
Mm-hmm.
Whereas a broker, we have that happen to, if that happens to one of our carriers, we have other carriers that don't have that exposure. And we're able to, still offer a very competitive price.
How many different carriers do you guys work with typically?
Depends on the asset class. I mean, as a company, we represent probably about 100 different carriers. So,
and we probably represent about 20, but it depends on, what it is.
Right.
There's a commercial and personal lines and completely separate animals.
Yeah, so that's what I was going to get into next. Those of us who own a home versus those of us who own an investment property, are there two different policies we need, or how does that work? I'll let Jose kind of answer that one.
Okay. You said softball question, but that's okay. That's a good one. That's a good one. Oh my God, there's so many avenues to take, right? So if you buy a property in your personal name, right? And let's say it's less than, 4 units or less, you can get into a personal lines insurance policy, right? You can get into a personal lines insurance policy, and within that personal lines, scope, there's a whole, in fact, Greg and I were just talking about this, how the carrier will estimate the replacement cost of that property, right? It's different on personal lines than it is on commercial lines. Commercial lines has a separate, secret sauce formula on how they estimate replacement costs. But on the commercial side of the house, you're dealing with a separate entity. So let's just say I bought a 4-unit property, but I created an LLC to add, a layer of protection against myself personally, that would be a commercial product, which is different. The cost could be different too. If the personal lines premium might be a little bit lower than a commercial premium because commercial is taking on more risk.
So for a property to become commercial, it needs to be held in an LLC or be over over 5 units, because you can only hold a less than 4 units in your personal name. Is
Yeah,
that accurate?
great question.
Mhm.
You can have a commercial policy for you as an individual too. But you don't have to have an LLC to have a
Okay.
commercial policy.
Mhm.
So
But then would it have to be over 5 units,
No.
or, so then what actually makes it a commercial?
the broker trying to figure out where's the best place for that, policy.
There is, and I'll piggyback on that a little bit. There is a difference in the structure of those contract forms, right? So personal lines insurance is taking on the form of the same thing you would have for like a homeowner's policy, right? So you're going to automatically have your coverage for the property, for any personal property within that space. There's automatically inclusion for any detached structures. And a lot of those things are dictated based on what's in that contract form. On a commercial policy, it's a different contract form, and you can be more selective on how you structure it. Another difference is the liability. So like your homeowner's policy has a limit of liability for you as the owner, whereas a commercial liability is going to break it out into various portions of general liability.
Okay. And then do you see most of your clients?
Can I just
Yeah, of
piggyback on
course.
that too? So you could buy a property that you're gonna live in, right? That you're gonna live in, and that, on the personal line side, like Greg just stated, you would have personal property covered and certain things like that. On a commercial policy, you wouldn't have personal property covered
Mhm.
typically.
Okay.
So there's a big difference there.
And so if it was an investment property, you wouldn't need
If
personal
it's-
property
If you're
more than
not living
likely?
in it and it's an investment property, I mean, you might have property that might need protection, but that like a lawnmower or, that would be business equipment,
Mhm.
not personal property.
Okay.
But if you own a structure that is your home and has commercial tenants in it, which is possible, you can't write
Mhm.
that on a personal lines policy.
Right.
So on like a 2 to 4 unit, how do they determine? I mean, they have tons of different things they're going through, right? Greg, I have my policy here. One of the things that always stands out to me is the replacement cost. How did they come up with that replacement cost? Because it doesn't always seem like it's actually like the value of my house. Or should it be in theory?
So one of the conversations we have with clients all the time is there's a difference between replacement cost and the value of the property, right? So most of the time when people think value, they're thinking, what did I buy this for, right? An insurance company doesn't really care what you bought it for. They're looking at based on the number of units, this construction type, the square footage, all of those kind of things. It's a 3-unit property. It's joisted masonry. It was built in, 1924. Based on all these factors, they're going to assimilate what they think it would cost based on current labor rates, material costs, those kind of things to determine what they think it's going to cost to rebuild that structure. And I tell people all the time, market value is different than replacement cost. If the construction cost, the materials all cost X, you could take the same property, we use round numbers and say $1 million property, put it on the north side of Chicago, and due to the market value in that area, the market value could be 1.3 million. You could take the same property and put it in the far southwest suburbs of Chicago where the market value is different. And the market value is 850,000, but the replacement cost is still $1 million. Does that help?
Yeah, and then, so the other thing on here, Jose, so we have the dwelling, and then it's other structures.
There's another key differentiator
Yes.
with that question, though. How do you want to replace the building, right? Do you want to replace it like new? At 100% replacement cost, right? Or do you want to replace it like used, minus depreciation? Right, so you got to look at the fine print. Typically, we like replacement costs, out there at 100%. But, as investors, I think I talked to quite a few today. They're squeezing every nickel, it has the cash flow. How are we gonna make this cash flow? So there is a big difference between an actual cash value and replacement cash. Replacement value.
What would be example of like what happens when someone makes that claim? Is it like a fire typically, or a tornado, or what's actually happening when someone's having to replace the entire building?
Well, we had, I had a meeting with a property adjuster, recently for one of my carriers. And there was a electrical fire in the home. And the fire department came out. It took them 9 hours to put out the fire. 9 hours. So not only was the structure like completely destroyed, but the foundation like sunk in. So that's about as total loss as you can get. And a lot of times you're thinking, oh, the foundation, you don't need to include that here, but in this case you did. You did need to worry about that. But guaranteed replacement cost is different than just extended replacement costs or traditional, replacement costs. There's like different differences within that.
So, and then when you're an investor, and your house burns down or your investment burns down and you can no longer collect rent, is this part where it says loss of use going to cover me for loss of rent typically?
Yeah, loss of use, there's a lot of extra expenses that come into play. You need to live somewhere else while your home's being, replaced. So there's a lot of what we call extra expenses that could be part of the claim that have nothing to do with the structure.
Okay. I know another thing I was always curious about when I was getting going, Greg, was you have your normal insurance on your personal property, you have it on your investment property, you have it on your car. And then typically I feel like a lot of investors are looking into some type of umbrella policy. And can you kind of describe exactly how an umbrella policy works and then when you would kind of recommend it?
Yeah, so an umbrella policy, there's two kinds of umbrellas you can get. One is a personal umbrella. So if you have your homeowner's policy, your auto, what that umbrella is additional liability coverage that will go over your home, your auto, you as the owner of that property, right? Your personal residence. You can also get a commercial umbrella. So that's an umbrella that simply is going over your commercial asset, right? So if I have a 6-unit building, I have it in an LLC, I can have an umbrella for that LLC. And the design of an umbrella is your homeowner's policy has liability, your auto policy has liability. If you have a claim that exceeds whatever limit of coverage you have, the umbrella is there to kick in for that additional coverage, right? The same thing is true on the commercial side. So if you have a severe loss, your typical commercial liability policy has $1 million of coverage per occurrence. But let's say you have a situation where there's a fire, there's a death, and someone comes after you as the owner of that property and says, we're claiming negligence on you for this person's death, and it's more than $1 million. That umbrella coverage is there to kick in for that additional coverage needed.
Makes sense.
One thing too, on the personal side of umbrella that people don't often think about, because they think it goes over my home, my auto, it does cover you on a personal side as a pedestrian. So there was a situation where there was a client I worked with. He was just walking down the street and he got hit on the sidewalk and had severe injury. So because he had it over his auto and his uninsured motorist coverage, that umbrella actually kicked in for all of his medical expenses simply as a pedestrian.
And getting an umbrella policy sometimes gives you discounts on your home and auto. as well. So, and it's probably the cheapest coverage you'll ever buy, because it's only a few $100s typically for $1 million on the personal side, personal line side. I mean, it depends, because some of the carriers rate on your driver history, because that's where most of the claims come that can, tap an umbrella policy
On a big accident
on a
that
big
you were in,
accident.
more than
Yes,
likely.
yes.
Okay.
That's gonna trigger it, and you gotta be careful, because you can have an umbrella policy over a homeowner's policy. But if you have your auto with like Tesla, who doesn't have a rating now,
Mhm.
you can't put that underneath some carriers' umbrellas. So you gotta be careful about having a gap in coverage like that. So there's some of these new companies that don't have ratings yet with AM Best, which I'm not familiar. I mean, I'm not sure if you guys are familiar with how carriers are rated,
Mhm.
the AM Best. We only deal with A-rated carriers or better, which I think Greg's the
Yeah.
same way.
Can you
Um,
describe the AM
Yeah,
best and
so
what
AM
it
Best
means?
is basically the financial strength of a carrier, their ability to weather, claim events and still survive.
Okay.
Mhm. Yeah, you don't want to go less than A.
You don't want to go less than. So when you're looking at that cost, you do want to look and see, is it an A-rated carrier? Is the replacement cost correct? Am I rated properly? Those are things you want to make sure. And you got a good broker, like, Greg, you're gonna be in probably good hands. They're gonna check it.
Yeah, I'm super grateful. I crashed my car twice recently, and thank God I didn't have to call my umbrella policy. I haven't crashed my car my entire life, and I crashed twice in 1 month. So not excited to see what's going to happen to my coverage, to be honest. But thankfully, no one was hurt. But to me, it was a sign that God was telling me I'm supposed to get a new car. So
Right.
get a new car in December. You hear it her first at the meetup. It will happen. But yeah, I'll open up to questions anyone else has, make them as hard as possible. Insurance is a tricky subject. I know it is for me at least. And so what kind of questions do we got on insurance, and what type of policies you need and how much?
Can I go?
Yeah, of course.
So fun story for the group. I'm under contract at the moment for 2 separate investment properties. So we're obviously shopping for insurance. Suggested coverage, Olivia, I heard you talking about medium-term rentals. Suggested coverage for medium-term rentals. I know it's quite a trendy space in the investor world. What kind of coverages do you suggest for that, short and medium term?
So, I mean, as far as the asset itself goes, the property, you're still going to be looking at a lot of the same kind of coverages, right? The tricky part with short to medium term rentals is how do they look at your loss of income, right? So if there's a claim, you typically have loss of rent. And with that carrier is going to come in and they're going to look at, well, what's the lease you have in place, right? So I have a 12-month lease, the rent's $1,500 a month, and they can extrapolate what your loss is, right? That is trickier to do with short-term rentals. So it's figuring out some of those carriers, they'll ask the question, do you allow short-term rental? And if you say yes, that can be a deal breaker. So it's figuring out which carrier writes that and how do they extrapolate loss of rental income is, I would say, the biggest thing to look for.
And you need to make sure that losses are covered. So when you say short-term rental, you're talking about Airbnb.
So we actually have both. We're in the contract on one Airbnb, and then we're going to turn into like a 38 plus rentals,
So you-
like traveling nurses.
So you definitely
Mhm.
want to make sure that that's brought up so that that's a covered item, because if it's a covered item, it's probably going to be, it's going to cost a little bit more money than a traditional policy because there's more risk.
And then for your midterm, you should have a lease. So
True.
make sure you get a lease signed for your midterm rental, and then they'll be able to track it back just like a long-term rental.
Thank you.
Yeah.
Gonski,
Don't
feel
be
like you
shy.
got a question, you're brewing.
Actually, we made a comment before about like Tesla not being rated. You're talking about Tesla into their own insurance product,
Yeah, they do.
but the State Farm and Allstate now those still can provide regular coverage for Tesla as well.
Yeah.
So you're talking about Tesla.
So Tesla has their own insurance company as well. So when you're buying a Tesla, they give you the option. So I've had some clients actually who bought Teslas. They can cover it with regular, with the carriers that we have also, but sometimes they choose to go with Tesla's insurance. They do have an insurance product. I think it's rated by mile or something like that driven. And the way that they offer it to some of my clients is, they give some kind of discounts for being like a safe driver. But then once you determine not a safe driver, you end up paying more in the long run. So a lot of them have come back. But I noticed that when somebody uses the Tesla insurance, they still want that auto underneath the umbrella policy. And when we check Tesla insurance, it's not rated yet. It's a new carrier. So there's no rating, so we can't put it underneath our personal umbrella product. Does that make sense?
I guess another question, I guess, back to real estate. Since really nothing left for us.
Yeah.
So one area that I've been interested in, blood get covered, I don't know if it's a way to get covered, is so you have either duplex down or garden units. And in the fall, the leaves clog all the drains, the water gets like under the door into the unit and causes damage. Is there any coverage for like any kind of rainwater getting into the building through doors or windows and things, even with the best efforts of the owner?
I would say a lot of it's going to come down to the definitions that are in your contract. So I mean, you can put sewer and drain backup coverage on there, but each contract is going to look different because they're going to have definitions of what is considered sewer and drain backing up. Would they call it that, or would they call it just surface water? It's going to be a big difference on how the definitions are read.
It's a great question. Not all carrier policy forms are the same. So you do have to read the policy, but generally speaking, if a water event happens within your structure, one of the pipes burst, sewer backup doesn't prevent the flood, so there's flood damage, then the sewer and drain backup coverage will probably be in play. But if it's coming from the outside into your structure, that's not covered typically by sewer and drain backup. Usually you need some kind of flood insurance. Some flood insurance, yeah. So again, all carriers are different. Some carriers have riders for that, for water coverage. So you got to be careful,
So what specifically is some traditional commercial policy, you could buy like an add-on flood coverage.
Yeah, especially when you have that garden level that you've got, you've built out and it's got value to it. You want to be sure you have some type of sewer drain backup coverage, which is probably the one that's going to happen more so than not. But we recently had a water event, I think 5 or 6 weeks ago, where it was just like heavy rain, right? Heavy rain. And what was happening is that the city closed the sewers so that there wasn't mass flooding everywhere, I guess. And so then that caused the water to come over sidewalk into some homes and cause damage. And so in some of those situations where they didn't have coverage for flood, but they did have sewer drain backup, you could still file a claim with the city of Chicago because they know, that they close some of those sewers. So they have a department that'll handle that claim for you. It's gonna take a while though.
Yeah.
With the city of Chicago, so.
City actually reimburses for that.
Yeah, in fact, they even published it in the cranes, I think. Chicago. Yeah. They have a product for that, yes.
And I would say the carriers that can include flood coverage, typically what they're doing is they're looking at the location of that property to see, are you in a flood zone or not? Because if you're not in a flood zone, having that as an add-on typically isn't super expensive yet either.
That's the best thing to do. It's not,
Yeah.
Exactly.
It's good to have. It's like kind of like getting the earthquake coverage. It's like might not happen.
Anything else? Lucian, Adam?
What's the biggest mistake you see people make when they, when they get insurance? Where's the biggest gap or the biggest lack of knowledge, or just like biggest advice you have for people with real estate? Real estate investors.
I would say, I don't know if it's a mistake, but what I'm seeing now in the marketplace is that you might be underinsured because of something you did, you set the level of coverage maybe 3, 4, 5, 10 years ago, and it's only gone up incrementally. But today, the costs to replace stuff, materials are up, I talked to the property adjuster and I was trying to nail him down, like, what's the per square foot cost for replacement nowadays? It should be a softball question, like Jonathan said, right? You should be able to answer that right away, but you know, they hemmed and they hawed and they said somewhere around $200 a square foot north of that, they said.
Hmm.
So if you're looking at your policy and it's less than $200 a square foot, you probably want, we look at that, especially if you've done work to the property.
Yeah, I would agree with that. I would also say one of the things that we've seen a lot of recently is as you're looking at new investment property, one of those things that you're looking at is how is this going to cash flow, right? So what's my mortgage going to be? What's my insurance going to be? Taxes? You're looking at all those things coming up with what we would call your pro forma, right? One of the biggest mistakes I've seen is they're looking at a seller's current expense for
Mhm.
insurance, and the seller's current expense, there's no telling how long ago was that set up? Is it just insurance for that building that they're paying for? Are they part of some big, large program because you're buying it off of someone that has a large portfolio? There's all things that can factor into that. So whoever it is you're dealing with, talk to them about what they should expect so you can have good intel going into that pro forma data that you're looking to put together. Because I've seen some variances that are pretty severe out there, especially over the last 6 months or so.
So if I'm getting ready to go buy a 10 unit, I can come to you guys and get a rough quote for something like that I can put in to actuals for my pro forma?
Yeah.
Okay, good enough.
To add to that, you know, you talked about a couple of claims. You want to be a little careful about filing too many claims on a property and what your deductible is, right? So if you've got like $1,000 deductible on $1 million property, you know, it's probably a little bit low on the deductible, because if you had like a maybe $1,200 loss, are you really going to file a claim for $200? No, right? So you might as well enjoy the savings of a higher deductible, whether it's 2,500 or 5,000. What happens is that, like, let's say you file a couple of small claims and you get a big one within a short period of time. Now you're getting hit with frequency and severity. And so a lot of the what we call admitted carriers will, you know, you're going to get non-renewed, and then the admitted carriers are not going to want to participate. So we're going to need to go to the non-admitted area, which is not where you want to be. Non-admitted. It's like an excess and surplus lines. It's basically when everybody else says no, this is where you go.
Yeah.
For coverage.
Into the subprime insurance provider, will charge you a whole lot more.
There's exclusions, you know, it's just not packaged as nicely as the admitted market. But
The rates are higher.
rates are higher, so
So
you gotta
Yeah,
be really
there's
careful
taxes and
about
fees that are
filing
included.
those little claims, right? So be judicious with that and have that long-term picture in mind, you know, when you're thinking about it, and have that higher deductible. And if you have a lot of properties, you probably have a crew to take care of the small stuff.
you guys have touched on this a little bit. Can you talk to us about ownership in personal name versus LLC and your thoughts and opinions on that? I have my opinions as a lender, you have your
Yeah.
opinions as insurance. Obviously.
I always recommend having an LLC, especially if it's an investment property, simply because it does give you an extra layer of protection between that investment asset and your personal assets. So if there's an incident where someone's filing a claim against me and that investment property is in my personal name, and I exhaust all the coverage that I have, then they can very easily start coming after my home, my cars, my personal assets, versus having that LLC in place. It doesn't make it impossible, but it does make it much harder to come after personal assets.
Yeah, I totally agree with that. I think,
So my, I talked to my PA about it, about an LLC, like, I think we did have additional insurance. What would you think, what do you think of that statement?
when he says additional insurance, he's saying additional personal umbrella coverage.
It's, okay, but
Well, I mean, that's another topic is, you know, you want to definitely be talking to your tax accountant, you know, and also your lawyer, you know, because we're not lawyers, we're insurance, you know, folks. But if you can talk to your insurance person, your lawyer, and your accountant, you can figure out what the, you know, tax implications are, legal implications are, and so forth. But I think when they said extra coverage, I think they're talking about umbrella coverage.
the, provided.
Yeah.
With the answer I wasn't expecting, so I'm like, oh.
Yeah, so umbrella coverage, I think you definitely want to have a personal umbrella and even a commercial umbrella.
to add some color to my question, obviously, as a lender, there's two reasons why LLC is tricky, right? Change of ownership means recall mortgage.
Mhm.
And then obviously the ease of refinancing, if it's not an LLC, it's much easier to refinance. And we all know we're going to be doing that within the next 24 months. So
Mhm.
that's what we're tied with at the moment is, do we do an LLC now and then take it out of the LLC, wait 6 months and refinance, or do we leave it in our name so we can refinance it? So
Mm.
that's
Makes
what we're
sense.
tied with at the moment.
Because if you do the LLC, is that still a traditional loan? Like a regular,
So you can change ownership of a residential mortgage, but you risk the service of recalling the mortgage. You don't have to pay the whole thing back.
Mhm.
They never really do that.
We're recording, I can see that.
You can always just quickly do it back to yourself.
Right, exactly.
Cool. Any other last minute questions?
You guys cover like say you have a water heating leak. Cover insurance.
So can I ask for a little clarification? So when you say damage from a water line, are you talking about the expense of actually replacing the water line or the damage that that water caused? So that's going to be determined if the contract includes coverage for underground piping. I will tell you, most policies don't. You can buy it. I actually just had this come up with a condo building that I was working with recently because they wanted coverage for underground piping. But typically it's not included automatically.
there's bundles on the personal line side, there's bundles. You know, we'll just say like premier, standard, and like there's 3 levels of bundles. And usually if you look at those bundles, some of them do, give the option to have underground pipes and stuff covered. Not all carriers, but some do offer that on the personal line side.
All right. Cool. Well, Jose, thanks again for coming. And yeah, you guys have any more questions for Greg and Jose? Follow up with them after we're done talking. And thanks everyone for coming.
Thank you.
Thank you for having us.